small
Good
is the
time to
talk
talk
here
about
today.
this. We've seen so many different products in a short amount of time. It's good to clear the air a little bit. I love this. This is a great way to kind of wind up the week to get me a little bit of clarity around all these different terms. Yeah, they all mean less. What do they mean?
Yeah, that's exactly right. And Pete knows these products more than anyone because it's funny, Pete, that here in 2021, the person who's kind of in tune with futures and derivatives trading, options, futures, stocks, ETFs, everything else, the person who's in tune with it, but has only been around for 3 or 4 or 5 years, someone like myself, been around for 5 or 6 years here, think of the mini as like
The big.
not only the big Pete, but like the old product.
Yeah.
That's like the iPhone 1,
Right.
and micros and smalls are like the current variations of that. You were around when they launched the minis, right? And maybe you can give a little discourse, a little history for what is a mini, and then now in 2021, what are micros and smalls?
Sure. So, when I first started, there was just one product, and it was called E-mini S&Ps, and it traded in pit. Me and 300 knuckleheads would yell at each other all day long, buying and selling these. Now, each contract had a multiplier of 500. So if you apply that to today's current value, you would have a product that
it's $2 million. That's a $2 million product.
Yeah, $2 million. So now that pit traded product, but remember the index was trading at 800, 810. The big push was could it ever go above 1,000? Now we're at 4,400 right now. So as the index grew, it became, as we see, the notional of it becomes overwhelming, and it becomes difficult to use because you can't fit it well. I'd much rather trade a product where I would trade 10 units or something to get to my usable size so I could scale in and out of that versus I got to take a big bite or not. So that 500 times the index product was cut down to 250 times the index product, still traded in the pit, so it could be used effectively. With the advent of electronic trading, the thought was, okay, the electronic trading was taking the ask on the customer of having to pick up a phone, call a dude, that dude calling another dude, would then wave to another dude who would then execute your order. And you would get that fill back anywhere from 5 minutes to 5 hours, depending on how busy the pit was. So with the advent of electronic trading, let's make this product more accessible to a broader audience. So they made it 50 times the index size. So if you think about that, they cut it way, way down. So that was the first step in terms of building a smaller product. They also thought that a smaller product would be easier for market makers to quote in this new electronic environment. Now remember, at that time, E-minis would do 1,000 contracts, the pit would do 250,000. But what we saw was this smaller product that leveled the playing field, so anybody who could log on could get access to it. And I say that with a caveat. At first, it wasn't. It was a very weird kind of connectivity you had to do to get access to the product. But let's not talk about that. So the mini was created. Now the mini has gone from this very small product, get a notional of, I think it was $3,000, $3,200, to now with the index of 4,400, it has become the $200,000 plus animal again. So so we're honestly back to where we first started with that huge product that traded in the pit. This is something you've done great research on. Asset inflation, or the natural rise in the price of assets, causes these notionally sized products, these products with a certain multiplier, to get very big. So comes the advent of, minis now are $250,000 product. How do we create a smaller one? Well, they went right to the well again of let's build a micro product. And this, they went to 1/10 the size of this mini, which by its name you would think, mini fits for me. I'm a smaller independent trader. Well, what fits now is being mindful of the notional. So now we've taken that beast and cut it down from $220,000 to $22,000. But that micro at $22,000 is still a big bite.
Still very big.
It's $1,700 in margin, which is a lot if you think about it. It's
Yep.
$22,000 in notional exposure. So the advent of the next iteration of product innovation, which is what is so important, is what we built.
Yeah,
Small product.
absolutely. Thank you
So
so much for
was
going
that
down.
did
No,
I
that was it
get too
was great.
tangential on?
No, it was absolutely perfect. The only note that I would make is that the original contract wasn't called the original was just was the S&P 500
It was just
future,
called,
right?
right, the S&P 500 future, right.
And then they make the mini probably what in like the 90s or the 2000s?
In the 90s, and they called it the E-mini.
E-mini,
So
yeah.
that you see the symbol ES, it was
Yeah.
the E-mini, which identified it as an electronically traded product, not a bit traded product. So it's still
And
called E-minis.
And then they come out with I think it's technically, is it the E Micro now? That is
Yes.
the thing that came out, I believe, in the last 2 years here. And now we've got the small exchange in the last year launching even smaller products. And before we compare all these things, I would say the one service that we did do ourselves, it's very easy for us to go from small to extra small to extra, extra small. They kind of messed it up with this micro mini. That doesn't really roll off the tongue. It doesn't really make any sense to me. But anyways, that's neither here nor there. That doesn't really affect the bottom line. Let's get into it. There are minis, micros, and small futures on most asset classes, Pete. Nothing really gained or lost when it comes to this. You've got equity indexes that are minis, micros, and smalls. You've got gold and silver and all these variations, crude oil and energies and interest rates as well. But I do want to get to the comparative piece here among these three types of futures that I guess were created for retail users. Although you look at that E-mini S&P and you're like, how is a $220,000 product for a retail user? But I guess you would say it kind of was created for that back in the day. But these product sizes vary real widely here. I mean, you talk about, and it's funny because when we created this small stocks, Pete, and I think it launched at around $60, and that's $6,000 in notional. You and I, having been around futures for so long, we thought that was going to be too small. Like there was this idea because E-minis and the micro E-minis were so big that we were almost going too small with it. And I think one of the things that we've learned, and that's why we've got a new product actually coming out in the next few weeks, that's going to be, around, a $30 product or $3,000. What we've learned, Pete, is that people love to have lower margins or what's translated as leverage. But what's even greater for the end user is having that on something that's not even 10 grand or 20 grand or 200 grand. I think there really is space to get even smaller than the small. Oh gosh, I typed this wrong. The small stocks product is. I mean, you compare that to the E-mini, and it's. I don't think it's even comparable how much smaller it is.
Right, but remember though, when we first launched these, what was the notional on this product? It was $5,200.
Sure.
So even there, we've seen our equity indexes, just like everybody else's, get pulled up in this huge rise in asset values. But the hunt always becomes, in my mind, it's like the greatest challenge, and I spent time working at CME. I was a member for 35 years. So while, there's a great, a huge part of my life was spent there. The challenge in retail was always trying to fit what does the retail trade in terms of size, and how do we make these institutionally sized products at $250,000 fit into their portfolios? And when you think about it, from a margin standpoint, maybe it fits. From a notional standpoint, who in the world of retail with the $50,000 or $40,000 account was the metric we used? How does a $220,000 bite of something fit into everything else they're doing? And it doesn't. And that was the issue that made it a struggle for retail, and retail from the business side to grow that pie of participants. So when we looked at it and reinvented the wheel in smalls, it was like, how do we grow the pie? Not just nibble away at the existing. Sure. Oh, you traded micros, come trade our product. But new traders, that's the win, is bringing new people into the future space.
Exactly. And that's where, when I entered the futures industry back in 2015, there was still this stink that still is on futures, this stink of like, Oh yeah, I tried to trade E-minis one time and I got blown out. And I don't want to have any part of that. And what we said, all of these meetings, product design and everything else was like, we don't want to create a product that, I mean, unless it's a crazy, outlier event where one of these markets is up or down like 40% or 50%. And at
Always
that
have
point,
that, right?
I don't know what to tell you, but we were like, we don't want to make it so that anyone's first experience is like, oh, I lost $3,000 in 5 minutes and I don't want any part of this. Absolutely not with the small exchange products. And that's why we made them smaller. And we're probably going to continue on that path of, I think we found a sweet spot of like the product is a few $1,000s and the margin is a couple hundred. Like this small stocks, like you say, the stock, there's nothing we could do about the stock market being up 35% in the last couple of years here. And so the prices just rise and this margin's risen as well. But we have reached the sweet spot among almost all of our products, which is the product is a few $1,000s and it costs you a couple $100 in margin to get it done. Because like you say, I mean, we're even aiming for accounts that are, $10,000 or $5,000 to feel comfortable with the product. And you can't when the margin's $12,000 and it'll move $12,000 in a week's time,
Right.
that E-mini S&P.
Yeah, you want something that, the concept of proportionality, that the product indifference comes from proportionality. In other words, I'm willing to trade different things and I should be indifferent about them, but I can't if they're disproportionate in terms of size. So that's what, I think I probably told this story before, but I'll never forget meeting a gentleman when we used to travel and educate, who said, I won't trade gold futures. They move faster than gold. And I got what he was saying, even though gold futures are tied exactly to the spot price of gold. There's a little bit of difference in price that's carry. Don't worry about what that means, but they move just like that. Arbitrageurs keep them within a dime of one another. What moves is 100 ounces of gold is a big amount of exposure, and that's what moves fast. So what I always go back to that, and that was a great statement by him because it really clarified what the challenge was in terms of adoption, was this huge amount of movement. And that, see, you hit on it. I don't know. As you bring up the slide of exactly what I'm talking about, without us, I'm blessed with the fact that Frank is the brains behind this operation here of building all these wonderful slides and the research that we get to talk about. So this is exactly what we're talking about here. What do I get for a piece of movement?
It all makes sense, right? Like that's why the story is told the way it is because like I want a smaller product and I want smaller margins that I have to pay. And then I also want something that if there is an outlier event, like a 5% move in stocks in the stock market in a given day, I don't want to lose thousands of dollars. Of course, like we can't create a product that is riskless. Like that does not exist. But we can create a product that if there is, an outlier move, the outlier risk is only a few $100. And that's what we've done here. And I think that's a great place to close this discussion on minis versus micros versus smalls. It's all stocks, it's commodities, it's similar assets, but really comes down to like what was created for the everyday person. And the smalls are, the first of their kind to be created for that exact user. But Pete, thanks so much for jumping on with me here. Late notice on Friday. It's always a ball with you. And we've got some more time coming up next on Splash into Futures. Don't miss it. Maybe some stuff to get going here on Friday afternoon before the weekend. Thanks for watching, everybody.